Okay, good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update number 227 for Monday, 15th of June, 2026. I hope you're well. Hope you've had a good weekend. Hope you're ready for what is going to be an interesting week ahead for us. Okay, lots going on, lots been going on, of course, and lots to come this week. So it is going to be an interesting week for us. If you are joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can share with you in the next 30 minutes, looking at strength and weakness within FX indices and commodities markets, looking at some charts of interest you might want to add to your watch list, and then a look at the live markets. It's not a signal service, it's not trade recommendations. It's me sharing with you what I'm looking at, which might be of relevance or help to you in your own trading and investing decisions. And as always, okay, you're always very welcome here, but just remember, you're always responsible for your own trading and investing decisions. And if you want a little bit more education, okay, this afternoon I'll be running the Active Trades Monday Market Matters webinar there, 2 o'clock London time. The educational piece will be all about trading using supply and demand. You're welcome to join us. You can either use that QR code or register for it on their website. And if you want a little bit more help and support, you can also join the VTP Trader Accountability Group, which is all about helping you build discipline, accountability, and consistency in your trading, regardless of whether you've been trading for 2 months or 2 decades, or regardless of whether you're a scalper, an intraday, a position, a swing, etc. Once again, there's a bit.ly code there you can use, or the QR code. I'll take you to details. Okay, so let's dig into the main element. What is this? These is just some snippets from my own weekend work, my own model, the STAM, where I'm looking to identify strength, trend, and momentum within the FX indices and commodities markets. Okay, so it might look a little bit sort of overwhelming, but it's not really once you get an idea to understand. So what is this telling me? How does this help us in our own trading decisions? Well, we are into week 25 of the year, ladies and gentlemen, right? Already almost halfway through the year. Where's the strength and where's the weakness? Well, invariably, I do this on a kind of Saturday morning, looking at the kind of, let's say, the longer term sort of swing positions. So, of course, and we have 2026 has shown us that an awful lot happens on weekends, and that's what we've been going on with. But doing this on a Saturday morning and then sort of building it into what we see happening in the markets today. What we were looking at was, well, US dollar, okay, was still top of the pile, with sterling, okay, interestingly in second place. And then at the bottom of the pile, Canadian dollar, all right, with Japanese yen there, okay, sort of occupying the bottom end of the pool. And I'm always just trying to identify where's the strength and where's the strength, the trend, and the momentum, so I can basically allocate my time, energy, and resources better going ahead in the week. So, of course, that's what I was looking at this weekend or Saturday morning. But of course, what we've had overnight is the sort of announcement of the effectively what looks like finally a peace deal, which kind of means sort of war off, risk on. I think it's going to, at the moment, it looks like it's going to be signed on Friday. And that, of course, gives lots of opportunity for a bit of flip-flops based upon, how we've seen it play out over the last couple of months. But not unsurprisingly, that kind of war off, risk on mode has an impact in markets. All right. And certainly that's what we've seen as we've gone into the start of the session today, where we could actually see that pretty much everything strengthened against the US dollar. Okay. The US dollar has been that sort of war on risk off play. And invariably, if there is a peace deal, well, then, I suspect we'll see that'll weaken the, well, it already has, weaken the dollar and strengthen certainly some of the risk on currencies. And one of those, of course, is sterling. Sterling has kind of held its place up there. Okay, I wouldn't necessarily say it's because of anything particularly strong or interesting. If anything, what we have here in the UK, okay, of course, is we've got quite a bit of data out of the UK this week. So we've got CPI on Wednesday morning. Okay, then we've got jobs numbers on Thursday morning, and then also the ECB at midday. Okay, with their bank rate. Okay, nobody's expecting any particular change, but people will be interested to see what the votes particularly were. And then we've got retail sales on Friday morning as well. So we've got all of those. But then we also have on Thursday evening, okay, we've got the by-election in Macclesfield there, which of course will be kind of interesting to see what how that particularly plays out. I think most people have sort of priced in the fact of a Burnham Labour win, and he's already said he's going to challenge Starmer for the leadership of the party. That you would have thought, okay, would have invariably had a weakening effect on the sterling. And certainly last week, okay, trading Thursday morning, okay, traded well in terms of the sort of announcement of the resignations of first the Defence Secretary, then his PPS, then the Armed Forces Minister. That all had an impact on weakening sterling. But so far it seems to have kind of held up. It seems to have done well. And whether that's just basically a little bit of a risk on bump, all right, at the end of the peace deal, and we'll find out over the next few days. But with all of that data and the by-election, I'll be curious to see how sterling plays out by the end of this this week. Okay, expect a kind of a volatile week for sterling. What we also saw is euro. Okay, euro sort of was there towards the sort of bottom end of the pile. Okay, it climbed its way out, but of course then we did have an interest rate hike from Miss Lagarde and the ECB last week, and we'll look at euro a little bit later to see what, if any, impact that plus this kind of risk on peace deal has had on euro when we look at it. Canadian dollar is still at the bottom of the pile, right? And no surprise there, of course, as we will see, is that invariably that has an impact on oil prices. Okay, oil has dropped considerably over the overnight, and not unsurprisingly, that also will have kind of a further weakening effect on Canadian dollar. When we look at some of the kind of indices, well, what we saw was that, we had quite a bit of a bearishness creeping in last week, but, what will be intriguing to see is, and we'll look at that in a moment, is to see how that particularly is played out going into the start of this week. Interestingly, certainly there were an awful lot of weekly candles that were kind of showing up there, right? And a lot of them supporting, okay, bullish momentum pin bars, bullish momentum pin bars. We'll look at that all in a moment. That was basically helping support that kind of people getting ready for the sort of peace deal. Oil is a tactical short, okay. Gold has been a strategic short, but we'll have a look at that, okay, because it's at an interesting point, as is silver, which is a tactical short, but at an interesting place. The VIX is going bullish, all right. Bitcoin remains a strategic sell, but like oil and gold and Bitcoin is actually at an interesting place on the charts, which we'll look at in a particular moment. So it's going to be an interesting week ahead. We've got that diesel, but as I said, there's not only is there a lot of UK data, but there's an awful lot of other central banks speaking. So we're expecting Bank of Japan tomorrow, okay, and they may hike rates, okay. We've also got the Aussies overnight, although we're not expecting any particular difference from them. Then, of course, we've got FOMC on Wednesday evening. Once again, we're not expecting any change, but people will be interested to see what Mr. Valsh has got to say in his press conference. We've got SNB, okay, Swiss National Bank. They are on Thursday, and once again, not expecting any change, but once again, people will be curious to see what their statement is in their press conference. So it is a pretty full-on week. There's not the interest in the earnings, okay, in terms of the kind of the majority of those major earnings have all gone through now, but there's enough going on with the central bankers, and as I said, certainly for those of us here in the UK trading sterling, FTSE, okay, gilts and UK stocks, it's going to be an interesting week, ladies and gentlemen. If I just look at the latest, okay, STAM for the FX, so this is part of the plugin that people on VTP Stage 2 get. What is this telling us? Give me the kind of latest data. Well, what we're actually sort of interested in seeing is this, yeah. You can see the dollar's already starting to weaken. Now look at the 4-hour chart there, okay. The strength has kind of ebbed away from there. And on the flip side of that, euro strength has started to sort of come through. It's the risk on trade, isn't it? Sterling, okay. Sterling is actually top of the pile there at the moment, okay, and it's been it's kind of an interesting morning, okay. Most of the business was done overnight, as I said, that kind of initial sort of risk-on move that we saw there. Canadian dollar still remains on the bones of its horse, ladies and gentlemen, but clearly there's been a little bit of a risk-on swing, not unsurprisingly, and we'll look at that now when we switch across to the live markets, okay. So just bear with me for a moment and we'll switch across and have a look at the charts of interest and then the live markets. Okay, so here we go. Hopefully you can still hear me. Hopefully you can see the chart. Well, not that it's much of a chart, but of course on Friday what we had was Mr. Musk's next entry onto markets was SpaceX, Space Exploration Technology Corp, and you can see that kind of it's a weekly candle, right? There's not much really of interest there for us to look at. So, but let's have a little look at the 30-minute chart in terms of how it operated, how it's playing out. So I will make in the interest of full disclosure, I got 26 shares in the ballot through one of my providers. So I have got an interest in this. But I mean, 26 shares is not exactly major, is it? But nonetheless, all right. What we saw was invariably, we priced at $135. We kind of opened at 150, pushed as high as like 176, and then came back. Okay, clearly a bit of a first day profit taking into the end of the session on Friday. It's kind of like over weekend, okay, in the pre-market, we've kind of worked our way up and we're currently looking like, what's that in the pre-market, around about 168, all right, so a little bit higher from the close. Clearly, I'll be intrigued to see is whether that is just SpaceX is just invariably sort of taken benefit of the overall kind of risk on play there. I'll be watching this, okay, to see whether I should basically sort of take a little bit of early profit and then see how that particularly plays out. Every man and his dog has basically been putting out on media how retail traders or the exit liquidity for all the big boys are going to look to run for the covers at the first sign of profit, but we shall have to watch that like a hawk over the next few days. But I think SPX will be interesting because I think it will become a little bit of a kind of a risk sentiment tool, all right? People will sort of look at it in terms of as a kind of proxy for risk, okay? That's what I think we'll work with. So naturally, I'm going to be watching this, like a hawk over the next couple of sessions. Okay, so what we also have is this is RKLB Rocket Labs. Okay, so not only has SpaceX kind of lifted most risk on assets, all right, but it also has kind of filtered through for the most part to anything involved with space. Rocket Lab, I've been involved in these, okay, since about early 2025. They are a space launch and space systems company, so it's kind of in the aerospace and defense space technology sector. Okay, so they had done well because they've kind of evolved from sort of initially sort of launch services into a kind of broader space infrastructure provider, right, which is all going to become the buzzwords. They've also getting exposure to kind of growing defense and government contracts, right? So that basically helps them. And invariably, they've been developing their neutron rocket, okay, which is one of the main drivers for kind of long-term growth drivers. So Rocket Lab, people are going to be watching these in terms of contract announcements, launch successes, all right, or on the other side of that, delays. And it has been a volatile but a fantastic run. Okay, so I think we talked about these here initially, okay, last year, okay, when it bounced off the weekly 50-period moving average here when they were just around about 18 dollars. Okay, then we were interested again when they came back here. It was about $40 to sort of I didn't get in at the $40 that I wanted. I had to basically sort of eat it a little bit, but we can see that price has kind of worked its way up there. There have been very volatile pullbacks as we are experiencing now, and I'm kind of going to be curious here now to see how do we work out at that big round number of 100. All right, does 100 flip from being resistance here back in January? can it now act as support? And if it does act as support, all right, is that an opportunity to add, or do we actually need a deeper position? All right. So, as I said, SpaceX has lifted everybody up, but I'll be curious to see, whether that kind of plays out or whether people are just taking early profits. Let's see how that looks at. Okay, certainly it looks like it's going to be kind of an interesting start to the week for them. Okay, so something a little bit different, right? This is CMCX, all right? So that is CMC Markets there, okay? Most people in the UK would know them as like online trading and financial services provider, brokerage, all right? So listed on the London Stock Exchange. Not unsurprisingly, revenue is heavily influenced by market volatility and trading across FX indices, commodities, equities. What we have seen from them is kind of increasing focus on institutional investment platform services, kind of to help diversify their earnings, and naturally sort of looking at higher market participation and active trading environments. That volatility generally supports revenue growth. So CMC, like most online brokerages or financial services providers, they tend to benefit when volatility rises, and quiet markets can kind of weigh on trading volumes and expectations for future earnings. We have had a enormously volatile 6 months of this year, haven't we? It really has been quite mad, and you have to say you could say that has been reflected in a CMC share price. Okay, this big number here, this big jump here, that was back in November 2025. That was around the time of Rachel Reeves' budget, and she had talked about invariably putting taxes on to spread betting, which had originally been, well, it continues to be free of capital gains tax, but also she was looking to put a whole host of taxes across financial services companies. And when she didn't do that, well, then basically that benefited CMC, didn't it? And then what we've seen is, from being down here at kind of like £2, which had been good support, we broke through £3, and invariably you can see from there, that has been the volatility this year has done well for that CMC. Okay, and there we are up there at, what's that, 463 pence. That has been a great move there. And so the question now becomes, well, actually, can it hold that out? Can it, if we do get a peace deal, does that now mean that everybody just goes on holiday for the summer? Everybody's had enough of the volatility. Everybody's a bit tired and burnt out and frazzled. And then do we see a little bit of quietness, all right? And does that have an impact on trading volumes during a normally weak period anyway over the summer? So I'll be watching this to see whether they can maintain that, or whether we have now just sort of had a little gone parabolic, pulled away from the moving averages, and whether there's a little bit of profit taking over the summer. So as I said, you might want to add that to your watch list. Next one, AZO, AutoZone. All right. So for those of us in the UK, you might look at them as a bit more of a specialized version of Halfords. All right. So they are kind of the leading automotive replacement parts retailer for the US. They're consumer discretionary. So they have done. I look at this, and I've spoken with these guys in the past. A lot of this is, I have to sort of thank my friends, okay, because most of my close friends are complete and utter petrol heads, and will think nothing of spending foolish sums of money on updating their cars, all right, and tinkering with them. Okay, maybe that's just a middle-aged man thing, all right. Rather, that's the new version of a midlife crisis. Okay, is to basically buy a car and then pour all your money into it. Okay, if you're too old and knackered to get on a bicycle, you're spending money on your cars. But anyway, I noticed this phenomenon amongst my friends, and decided to utilize it for my own benefit, and so bought AutoZone shares must be about 3-4 years ago, and they had done well. They had done well, and not only that, they had also done well because as interest rates rose, okay, well, what we saw was that invariably that had a knock-on impact to new car purchases, and lots of people buying second-hand cars. All right, so excuse me. So as AutoZone, they benefited from kind of aging vehicle fleets, increased maintenance spending. All right, so that was generating great cash. All right, and that supported some share buyback programs by the company itself. And it remains kind of what would you call it, like a relatively resilient business model compared with many other discretionary retailers. But you can see that kind of overall economic uncertainty has had its impact, all right? And you're having, as I say all the time, once price starts pulling away from those moving averages, I always start to get a bit nervous. It's going parabolic. And actually what we can see is that, really over the last 9 months or so, having been in that fantastic trend, okay, it has basically come off those highs at, $4,000 and worked its way back. And now we find ourselves around about $3,000 and the weekly 200 period moving average, which, the last time we visited here was during lockdown, all right, in March 2020, all right. Then, it's like 6 years, over 6 years since we've been here, okay. And so, as you can see, it has been a fantastic run, and thank the Lord for those interest rate rises that basically, AutoZone did well out of. But now look at that, we've pulled back to here, first time in 6 years, and the question becomes, all right, is this a monger? Is this a buying opportunity here? Okay, certainly the price action there is kind of has been pretty bearish, isn't it? It's beneath the 20, beneath the 50. It's been working its way down. I'm going to see is there enough love here to actually to bounce and bounce strongly, or do we get a dead cat bounce before we drift our way lower? So that's why it's on my list to watch over the next few weeks. And of course, as well as AutoZone, well, naturally, we're interested in energy. So this is XLE, which is the energy sector ETF. Okay, so reflecting, major US energy companies. Okay, so it includes, American energy companies like Exxon, Chevron, who we've covered quite a bit and had done well. All right, but they've also come off there. I see those two companies almost like sat on a ledge at the moment, and you have to wonder, with the announcement of a supposedly proper peace deal, is that going to have an impact? It's already an impact on the oil price, which we'll look at in a moment, but does, what impact does it have on the sector ETF, but also the those energy companies? So not unsurprisingly, XLE performance is always, it's closely tied to the oil and natural gas prices, and impacts on kind of geopolitical tensions or supply disruptions. They are always going to remain those kind of major drivers that we work at. The way I look at this here at the moment, ladies and gentlemen, on this weekly chart, is that it's almost like we're in, we're coiling up here, aren't we? That's a bit of a triangle. Now, if you're a classical technical analyst, all right, you'd be saying, well, Paul, this is, a triangle is a continuation pattern. That's your flagpole. You'd be looking for it to go, screaming much, much further higher. Okay. Personally, though, I wonder whether we start to see generally those kind of oil and natural gas prices drop, and along with them, the share prices of those particular companies like Exxon and Chevron, in which case do we get a kind of drift our way back down to the 50? All right, that's one of my views. I see us, we're sat on that 20 period moving average, but if you look at last week, was a bit of an indecision spinning top. The week before was kind of a bearish pin bar. We had this is what I call a ski jump, right, in terms of it's a lower high basically before price rolls over. So I am watching that relationship there between price, the 20 period moving average, and also watching, as I said, Chevron and Exxon. And I wonder if that breaks down, do we just get a bit of in the way that we get a relief rally for equity markets, does that basically be almost like a relief bearish move down for energy companies? And if so, I'd be looking at back down to the kind of $50 big round number there, the weekly 50 be there. So as I said, it's coiling up, okay, and it's getting ready to make its move, and so that is why it's on my watch list to see how does that play out and whether I can take advantage of that particular move. Okay, so there you go. There's the charts of interest. Plenty to hopefully for you to take away and watch and see how that plays out. Let's now switch across to the live markets. Let's have a look. So just bear with me 1 second, and I'll bring the other live markets up for us here. Just in that. Okay, so here we are. So this is kind of indices, all right. Indices and commodities. So I've got Dow on the weekly, NASDAQ on the weekly, SP 500 on the weekly, Russell on the weekly, FTSE on the weekly, Nikkei on the weekly, DAX, and oil. Okay, so listen, we looked at XLE. All right, just look at where we've been going. Look where we are now. Okay, around about $80. Okay, that's West Texas. All right, but I think Brent went even further lower this morning. Okay, so that's a reflection of that kind of risk, that kind of war off risk on. All right, and as I said, I wonder whether that'll also have an impact on XLE as we've just looked at. But certainly, if we look at the American indexes, a couple of weeks ago, I was talking about how, we were printing these kind of bearish engulfing key reversal candles. Okay, we've certainly printed those, a bearish pin bar on Dow, engulfing key reversal candles on Russell and on S&P 500 and NASDAQ. But actually what we can see is last week, we kind of reversed it. And you can see already the electronic markets, they're already pushing higher, aren't they? All right, that's a real flip there. There's a real, relief risk on relief rally going up there. Okay, and that's pushing that particular higher. We also saw that with the Nikkei overnight. You can see that there. DAX hasn't followed through as particular much. Okay, as we'd look at. All right, DAX has been a little bit. Yeah, it certainly last week. Intraday wise was a fantastic week for last week for trading down to the 50 and the bounce up off it. We can see that it certainly is gapped up, but it hasn't really particularly followed through there, has it? Not exactly really exciting in the same way as those American indexes and the Nikkei was there. Okay, and it just to me seems like every time we get north of 25,000, all right, let's just put that level in on here. Okay, let's just bear with me 1 second. Let's put that boy in. As I said, pretty much every time we see it north of 25,000, it's almost as like it's it gets hypoxia. All right, okay, it gets a little bit of out of oxygen and then punts its way down, rolls its way over. Okay, and so I have to see, is there any chance of it turning 25,000 into a resistance area, turning it into support and into a base to a move higher, or is this just going to be a little bit of, I wonder if a little bit of profit taking before we get into the kind of summer doldrums? All right, so you might want to take a watch on that. Closer to home, FTSE weekly chart, not massively dissimilar to that XLE chart, is it? It's been in a long uptrend, but now we're coiling up, and you've heard me talk about this for the last couple of kind of weeks here. Let me just update that. Is that I've thought that we are coiling up in FTSE, all right, and I think we've got, as I said earlier, we've got a lot of UK data coming out this week to keep an eye on, but also we have that by-election, and I can't help but think that maybe the big boys are just sat waiting to see whether Burnham, King of the North, well, self-proclaimed King of the North, you can other adjectives other than king are available. Okay, whichever word you particularly wish to use, ladies and gentlemen. But yeah, if he does win and he does, put Burnham does win and he does then go for a leadership challenge against Starmer. The rumors over the weekend is that Nut Job Net Zero Miliband would be his chancellor, and it just makes me. It makes you want to hold your head in your hands. All right, but anyway, it is what it is. There will be opportunity for us as traders, and that's ultimately what we've got to watch. But as I said, I think that's still just coiling up. All right, and we'll have to wait till the end of this week to get some clarity on the way that moves. Let's have a quick look. Gold. All right, so gold. Let's get up on the weekly chart. As I said, gold. We have drifted way. Okay, but look at where we are. We're kind of sat at that 50 period moving average. Does it have an opportunity to hold that as a base and work its way higher, at least maybe up to that 20 period moving average? Certainly, if we go down to the daily chart, you can see that actually, there's been a little bit of bullishness, but is that just a dead cat bounce off as I say, risk on relief rally? What we see is silver, right, has been not massively dissimilar in terms of where did we end up last week? Bang, down at the 50, printing a nice bullish pin bar off it. Okay, is it? And we can see this week we've started with a little bit of a bounce off it as well. Okay, really nice. And this was across the view. We had a really nice bullish key reversal there. Okay, from Thursday. And bang, are we going to get up above the daily 200? Are we going to hold up above the 70? All of that's bullish. You would expect if there is a risk on relief rally, that would be generally good for silver. Okay, and we'll see whether that follows through. Also, the crypto bros will be hoping that perhaps maybe some of that risk on relief rally will bail them out. Okay, a bit like we've just said, the gold's been at the weekly 50, silver's been at the weekly 50, Bitcoin is at the weekly 200 there. Okay, that's sort of the kind of the area we're looking at 60,000 there. 60,000 there. You know, is this going to be support for Bitcoin? Okay, if we go down to the daily, you know, you might say, well, Paul, there we go. You know, there's a bit of a scruffy double bottom there on the daily chart at 60,000, but you can see we're sort of just kind of working our way a little bit higher. And I think a lot of this will be because of certainly of the last few days. Okay, it will probably be because of the dollar. Okay, having had the dollar strengthen significantly. Now that when invariably the peace deal looked as if it wasn't going to last or even hold, now we're looking at it a little bit differently. Okay, so bang. Okay, so here we go. I've got. Here we go. This is this is the dollar chart. Okay, so Aussie on the 4-hour, Euro dollar 4-hour, cable on the 4-hour, dollar Swiss, Kiwi dollar, dollar CAD, okay, dollar yen, and of course dollar index. All right, and so when I look at those FX markets, I always start with the dollar index. Let's go to that weekly chart. You know, and you can see, you know, we pumped up to 100, okay, this area here, 100, and, you know, bang, you know, what we're looking at, I probably need to update this, this chart here as well, just basically, my other charts are on my other main trading computer. Here we go, where is it? There we go, all right, there we go. So, as I said, we can see we came up to 100, but you can see we've fallen our way down from there. Okay, having worked our way up that, as I said, that kind of the Thursday candle there. Okay, that daily candle. Remember, we just looked at, there was a nice bullish key reversal on silver, it was on gold. Okay, where it was also it was also a bearish kind of engulfing candle on the dollar index, and you can see that we've gone from 100 trading down as low as 99.11. All right, and that's where we see. Look at that on the 4-hour chart. Woof. You know, we've dropped to the 50, kind of look to hold it, and then you get a squeeze. Okay, a coil building between the 20 and 50, and now we're beneath it. Okay, and back down to, like, as I said, 99.11, and we're just in there. And I'll be intrigued to see how do we play this afternoon. Okay, in that American session, is there that risk on relief rally? In which case, I would expect the dollar to weaken further, and naturally that will have an impact on all of these other majors. Let's have a quick look at euro and then sterling. I appreciate I overran a little bit, but there's so much going on I want to just try and share with you. So what's this? What are we looking at here? Okay, euro dollar, euro sterling, euro Aussie, euro CAD, euro yen, euro Swiss, euro Kiwi, and the DAX. All right. So as I said last week, we had the euro was kind of really weak in the STAM. I think people had been kind of not terribly impressed at how poorly euro had worked its way from whenever there was a risk on rally, it just didn't sort of follow through with any kind of real vigor. But maybe what we see is the interest rate hike we got from Miss Lagarde. Maybe that is going to provide it with an element of sort of like juice for the journey. Certainly, when you're looking at this, like euro dollar on the daily chart, having been at 115, it bounced really nicely those last few days. Okay, you've got a little bit of euro strength. Euro yen, the same. Okay, the last few days we've had a little bit of strength. All right. Euro sterling, the last couple of days, it's worked its way around about. We'll look at that. 86.25 has been a kind of real level to keep an eye on there. Euro against Canadian dollar has strengthened. Euro against Kiwi has been a little bit of a block. Euro against Swiss franc has been a little bit of a block. All right, okay. And having moved the Euro Aussie, we've had a little bit. That looks like it could be a bull flag that playing up there. What I'd want to see is that basically come down into the 50-20 into that zone and then work its way up higher. But hopefully you can see there just on some of those euro charts. Okay, you know, we're seeing a little bit of euro strength creeping in there, and the question, as always, will be if there is a risk on relief rally, will that particularly follow through, and will we see, you know, kind of dollar weakness and euro strength there? All right, and as always, we'll finish with sterling here. All right, so bang, sterling. I'm just working this. So there was very little on an intraday basis for me to do this morning, because most of the moves in sterling had happened overnight because of the Iran deal. But we're looking at what is really going on there. As I said with FTSE, sterling has had some strength, but part of it is you've got to wonder, well, where has it come from? All right, if we look at here on the weekly chart and cable, if you look at that for the last few weeks, yeah, nothing terribly exciting. We have ground our way higher against Japanese yen. So is everybody, even after their intervention. We'll see what Bank of Japan do overnight, okay, and whether that has any particular impact. We have strengthened against against the Aussie, okay. The chart against Kiwi has been sort of messy. We've strengthened against Canadian dollar even, but Canadian dollar has been weak against everybody, right? Kind of maybe the ones that have been of interest have been, if we look at pound against Swiss franc, and we talked about here, all right, this was start of the war. This S&P said they were manipulating, and they have done. We're in a little bit of a block, okay. We kind of popped off the 50, but actually last week we closed back above the 50 period moving average. All right, that's where we've closed there. All right, and you can look on the daily chart. This month we have seen, what I'd probably say Swiss franc weakness. All right, more so than sterling strength, but ultimately that's where we've worked our way up there. Okay, and pound against Swiss franc. All right, so watch that. And then I say on the flip side, euro against sterling. You might look at that as being in a kind of like a descending triangle there, right? Every time it's got down to this kind of 86 area, 86.25, it's bounced, but every bounce has been a little bit weaker, hasn't it? It's been a little bit weaker, and we're kind of sat there, right? And so you're looking to see, well, if we go down to the daily chart, is this going to continue, or is 86.25 going to is it going to break, or are we going to get a little bit of that euro strength and a little bit of sterling weakness, which would kind of pump us above? So we're at a zone, all right, which has acted as support. You can see hopefully there, and okay, now as I said, I'll be talking about this a little bit later. But the question becomes, does it have what it takes to go there? Okay, maybe by the end of this week, but after all that sterling data and all the sterling political volatility, maybe we'll have a little bit of a clearer pattern there. Okay, but that's an area and a zone that I'm kind of watching at the moment to see if it holds or if it breaks. Okay, there you go, ladies and gentlemen. All right, I appreciate we overran a little bit, but there's so much for me to share with you, and I appreciate that I am flying through this, all right, as fast as I can. But as I said, I just want to share as much with you, especially when we're in a time in a period where there's an awful lot going on in markets. Anyway, I hope that helps you. I hope that gives you a little bit of help and insight that you can take away into your own trading. As I said, it is going to be a very busy, a very volatile week. So make sure that you're on top of your news flow. Make sure you're on top of your order flow. Make sure you're on top of your risk management. Have a great trading week, everybody, and I will speak to you soon. Take care and trade well, everybody. Cheers.